Alright guys, welcome back again to my channel, and this is a new week to make another video for you guys. I make videos on my forex journey and my forex trading as a journal weekly, and this is just part of what I'm going to be making out for this week. So guys, lately this month I've really been losing a lot of trades, and this month has not really been a good month for me. September, it's normal, like it's really normal to be having those kind of losses. And in a month or in some months or some weeks. All right, so and that got me into a kind of like reflection, and I've been sitting down to now think what have been making me what have been making me profitable. When you get to start having losses, you start thinking your trading has problems, or maybe your system is not working again. So it makes you just go back into a reflection automatically. You don't really need to just start sitting down to do it. You start thinking it's not working, but then you know very well that I know it's just part of the game. For traders like us that experience, that losses are part of the game. So that got me into reflection, and I decided, like, just like a light bulb, I think I should make a video on this, what got me profitable. And that's what led to the name of this video, which is going to be weird hack I used to deal with my or fix my discipline and patience in my trading, because those were the two things that really got way outstanding in my trading. How I was able to fix my discipline and impatience. Patience was one of my big problems. I keep saying this to you guys. So in this video, I'm going to be listing out four reasons to why I was able to how I was able to deal with my patience and my discipline, and that's what this video is going to really be about. So guys, let's get started. All right guys, the first thing first, one of the very first thing that I was able to do in my trading was avoid emotional decisions. That was one of the very key things that I was able to do to deal with my patience and my indiscipline, was avoiding emotional decisions. I was the trader. I was always moved by every candlestick. If the candlestick moved like this, I was already, like, if I see a very big bullish candle, I'm in already, in fear of FOMO that is going to leave me, or the market is going to be very like it's going to rally to the upside very much, and I'll rush into. I was just very emotional about my trading. It was not more of like it was not a, let's say, mechanical. Mechanical style is, you look at things. How, let's say, you want to start a car engine. You first put the key, you turn it, and that's like the key is like it ignites it leads to the ignition key, the ignition starter. That's the place that ignites the engine, or the fuel mixture, the combustion, like a mechanic. And then you find out that this will do this will do this will do this, then lead to the car being starting, getting started. Same thing as, or even your body too is mechanical. You eat, your body goes here, passes down to this place, passes. It's like it's a routine. That's what I mean by mechanical. It's a routine. It goes like this. That it's not just a random. It has a way it goes, and then gives an end result. Same thing with making things. If you check how they make bread, it's like routine. First you do this, second you do this, you make the sugar. If you don't do that accordingly, you likely not make a bread at the end of the day, or not likely you likely not make a good bread at the end of the day. So that's what I mean by a mechanical way, like a way that it has a path to follow. So before I was just trading randomly, I was just like, every break of our support zone it was me to get in. It's really crazy, because I learned that at the end of the day, it's not every break that is that should be taken. In fact, it's not your strategy is not all of them that you actually will be taking. There's some that you say, oh no, this is high probability, and there's some that you say, no, this is low probability setup. Like I trade chart patterns now, but it's not every double tops that I'll see that I'll take, or it's not every double bottoms that I'll see that I'll take. All right, so that was that was one of the things that I was really able to deal with. And I realized that my biggest enemy was actually not the market. It was actually my emotions. It was actually my emotions. So emotions are the biggest problem in the market. Every trader has realized this. Every trader has come to a conclusion that your emotions are your biggest problem. It's not even your risk management, not even your strategy. So when I discovered that the market was not actually the problem, because whether you trade or not, the market is actually still going to move up or down. Or the problem is that, are you actually going to move in the right way or in the wrong way? All right. And I also had fear of losing, greed. Man, it goes on and on, but just know that all of them were all based on lack of emotional discipline. All right. I will take trades that I shouldn't have taken, and push trades that see trades that are not even there. All those kind of things with the things that those things are like the fruits of emotional decision. So that's the first thing that I was able to come to a conclusion that helped me in my trading was avoiding emotional decisions. Now the second thing was this waiting for high probability setups. All right, that was one of the that was one of the very things I was able to do, was waiting for high probability setups. So waiting for high probability setups, and how did I go about this? How I went back about waiting for high probability setups was going to the higher time frame. I've said it in my previous videos, because that was the way for me that I could find to wait. Actually, I was going to the higher time frame. So now you mostly see me on the 4 hour, the 2 hour, the 1 hour. I know those places take time to build up. So that was the way I was able to deal with it, going to the higher time frame. I stopped chasing fast profit. I started seeing trading as more of a marathon, not a sprint. And if you know what a marathon and a sprint is, I was listening to one guy on Instagram, and he explained what difference between a marathon and a sprint. If you see a marathon race, you find out that everybody in the marathon race, there's no place, there's no starting point. You start from anywhere, but that anywhere you're starting from doesn't mean that you'll be the first. Actually, you see that they're all crowded. There's no like first position, second position. Everybody is just, it's just like, because the journey is very far and it's not determined by who starts. But if you check a race, there's actually, everybody has to start at the same line, and whoever is ahead is ahead. There's nobody, if someone is ahead, the person is ahead, the person is going to win. The person has advantage over you. So is a marathon, not a race. All right, because everybody has, it's a long journey. Take it as a long journey. So that's how I started looking at trading. That shifted my mindset. Yeah, that had gave me a mindset shift, helped me stay consistent and avoiding over trading. That was the main thing, avoiding over trading, because when you're on the higher time frame, because those things take long to form, you start actually not even really, sometimes mostly seeing trades. Last week I took only two trades. Why? Because market was moving, but I couldn't see 4 hour time frame before it could give me opportunities. 1 hour, 2 hour, it takes time to give all those opportunities for me to not get in on 30 minutes or the 50 minutes. So that was the very well, that was the way I was able to do with it, waiting for high probability setups, high probability trades. All right, so that makes me staying, going to the higher time frames. I'm saying this again, this that helped me go to the higher time frames, staying there, waiting there, and doing everything there. All right, and that really helped me. So that's the number two reasons to how I was able to deal with my, or fix my impatience and discipline. Now the third reason, which is very important reason, was the risk management. I keep saying this, guys. Risk management was the is the binding is the factor amongst all other factors. Risk management. Before, I would risk too much in hope of quick. Oh God, Jesus Christ, it's really crazy. Risk management is really crazy. Like before, I'll risk a lot. You just have this belief that, oh, this one's going to work. Probably you took two losses, you believe that this one's going to work, and you risk high. Sometimes you see me, I'll make profit, and and that's when I started knowing that risk management was my problem. At a point, my problem was, one of the problems was that I found myself, my profit account, bringing it back to balance, back to drawdown, back to balance, two for like severally. You're not blowing this account, you've not blown it, but all you do is you bring like 4% drawdown, 5% drawdown, and the next thing you see that you bring it back to the balance again. This happens first time, second time, third time, bro. That person knows what he's doing. He's just having some risk management problems. All right, and that was because I'll risk, and then I'll feel like, okay, yes, I think I just want to risk on profit I made just yesterday, and I'll risk the profit I made yesterday, and on paper I'll have that trade will be a losing trade, and now the whole profit will come back. So it was just like a back forth, go forth, back forth, like going front and back, front and back, front and back, which was really crazy. How I solved that was, once I set a strict rules, like never risk more than 1%, 0.5% is actually what I like to do, or a certain percentage of my account per trade. It made me calmer. It made me more calm. If there's a word like calmer, it made me more calm. All right. So risk management is one of the very most important one. Is one of the most very important one. Staying disciplined with your risk management, guys. Stay disciplined with your risk management. It really helped me. I remember a trade that I took, and I can't recall the setup, what pair was that, but I took the trade and I made profit. And then suddenly I started calculating the profit because the trade now went very far, like it went to my direction very well. So I started calculating the profit that I was supposed to have made. Every trader does that, and I was like, oh, I'm supposed to make about more. I made extra $20 in this trade, and you guess what? I said, okay, I have to make that $20 this today, and I started looking for trades, and I reached, and I lost that trade. You can imagine how, God, how all these things just connect: risk management, emotions, and all of those crap, all of those things, guys. The third thing was risk management, and now the fourth thing, which also led, which was is also an important thing that led me to be able to deal with my risk management, and this is that made me actually not get very good in my trading was is the combination of all of them. Not having a good risk management, I was able to not have a good, sorry, I was saying not the risk management, have a good trading plan. Sorry, trading plan is what I meant to say. Having a good trading plan. And because all those things I've listed from the beginning to the end, at the end of the day, it boils down to having a good trading plan. First one I said was avoiding emotional decisions. The second one was high probability setups. The third one was risk management. And all of them, if you just all of them, it ends up on having a good trading plan, because the trading plan should consist of all those the first three things I said. Having a good trading plan. All right, so that was one of the things I did, and I had a very good trading plan. I set it, sit down, think, just the same way you plan. I don't ever sat down to plan maybe something, a deal, or maybe whatever is it. Have you sat down to plan? Just see how you go about it. It's just the same way you just go about your trading plan. Sit down, think, be alone, calculate everything, ups and the disadvantages and advantages, write it down. So that was the last, that's the fourth thing, guys. Stay, have a good trading plan and stay disciplined to it. That's how I was able to do my trading plans. And this will bring this video to a pause, and we'll be heading to the charts to just to summarize and see what we have for this coming week, and the coming month, because the month is about to end. So we're just looking out for what we have for this coming month. So let's get to the chart, and I'll show you guys the trade I actually took that gave me a loss and how it actually went up. So guys, let's get to the charts. Alright guys, welcome to the charts, and I'm going to show you guys the trade I took for this week. And just two trades I took. One was very stupid trade, and the other was actually a good trade, just that the market probably was not ready to move, and it hit me first in stop loss before heading to my direction. But I had a lesson to also learn, which I'm going to tell you guys on this video. And okay, the first trade I took this week, that just this past week, was NZDJPY, which I shouldn't have taken. It was a low probability setup, and it's also a setup that I actually saw it to be something I shouldn't take. I think I've seen it before. This one don't always play out. All right, so now this was a very good trade of based on liquidity. So you can see on the 4-hour market is making consistent higher highs and higher lows. Let me draw it for you guys. You can see the market is making highs, low, highs, low, highs, low, highs. All right, and then we see this sudden push to the downside. Is assumed, is believed by my strategy to be a sweep of liquidity, where you cannot really see a clear structure to the downside. In the reversal, you just see a very clean straight line like this one you see here. It's assumed to be a liquidity sweep, but yet we cannot just enter. We need to see some confirmations that indeed it's a liquidity sweep. So we have to be in an area of interest. We have to see chart patterns or candlesticks pattern. So now, was there an area of interest? Yes, there was an area of interest, which was this green line, this green one you see right here. So what was the chart pattern? Was actually an engulfing 4-hour engulfing candle, which is a valid one, but the way it formed is the way I do not like, and I have seen this way formed before. I don't like these ones that form in this manner. Whereby I like the ones that give this U-shaped pattern and then head to the upside, not the ones that just, it's just like this thing right now. This is the one I don't like, and I actually was skeptical about it, but I still took the trade, probably maybe because of the urge to take a trade or something. It was on a Monday. So this was the first trade I took, and it was his stop loss, but I cut my losses short, making I just realized that no, this thing is not going to be heading to my direction. I shouldn't have taken this trade. I cut it short as a loss. So that was it. It's fine. I will not take this a trade again. I will never take it again. Never. I'll try never to take it again. The second one was the UK 100. Is a stock market. Is indices. Sorry, it's an indices. So I've been looking to long this UK 100. You can see these are my previous trades I've actually taken. This one was a win. This one over here was a win. This one was a loss. This one was a loss. So this was the one of last 2 weeks, and this was the one of this week. All right, because I assume that the worst have come. Oh, I just my light has just gone off. I assume that the worst has come. Man, this place is really gonna be dark. Alrighty, I'm still visible. You guys can still see me. Yeah. And okay, this was it. And so I'm looking to buy this market because we are in an uptrend on the daily, on the 4 hour. We are all in an uptrend. So every time it aligns, so what do I need to do is to look for an area of interest to trade with the trend. So how did I see that? I saw this as an area of interest, but I couldn't get a trade opportunity right here. So I decided, okay, if I can get a trade opportunity around this zone, break of this support, so you can, if you go to the 1 hour time frame, you find out that that's a mini support area which will be valid because I think we've cleared, we are in an uptrend. So I saw this move, this break, and then retest, and you can see my line here, and I draw. This was a support, so it broke the resistance. Sorry, retested it, gave me a morning star pattern, and then indecision candle, and then I got in. I was in profit. The next day I came back, I saw I was a stop loss. Like, I was like, what the fuck? And then I saw it right to downside. And then immediately I saw this. I knew this was just a liquidity grab. This thing here, right here. All right. You can see markets quickly shroud to the downside and then immediately run up to the upside again. That is usually a sign of liquidity sweep. And then you can see how it rallied to the upside, and then I was like, okay, yeah, it's probably not going to get up to this side. And then next thing I came again, I saw it here again, but I was not in any trade. So once I started seeing the market being flat like this, as you can see, is in a range, I actually stay out from that market. I do not trade such markets. So after even seeing this, I still was not worried because I would not want to like to trade. Once the market is flat, my strategy stops working. My strategy works very well in the trading market. All right, it works very well in the trading market. So it's less likely to work on a flat market is a ranging market. So after that, I was not interested in this trade again. I was instead of looking at the last 100, which I saw an opportunity. I took it, and I still left it in little profit because I became skeptical about the trade, and I don't like that feeling when I'm not sure of the trade again. Just get out of that trade because with his stop loss, you'll be so angry that you you felt it, but you still didn't ignore it. I mean, so when I just feel like that, I just get out of that trade instead of sitting down waiting for it to see whether I will play out or not. I just get out of that trade, which is advisable for you guys too. So maybe I saw this UK 100 was flat, I got out, and then look at, you can still see market still rally to the upside. I knew the overall trend was going to be up, but it was not yet time. So yeah, that's it for guys, and let's look at for what this was the week the trade I was in on the NAS 100, which I later got out from because I didn't really like the way it was setting up again. I like initially, I know this that sometimes you take a trade initially it looks good, then all of a sudden you start creating patterns that you know these patterns are not supposed to be seen in this kind of trade, or you don't like to see this kind of pattern. It's best advice just get out of that market. All right, just get out of that market, or probably just look for a little bit of, if I just get off the market. So yeah, that's it for the NAS 100. So I was just limiting of profit, and you can see it rallied to the upside. This was exactly where my stop loss and my TP was, as you can see, right to the upside. So what are we going to be looking out for this coming week? What I'm going to be looking out for this coming week is nothing, because I've done my analysis before coming here. Nothing. Every market is just quiet. It's not really showing any goof, any setup. All right, it's not really showing any setup to be very sure about, but definitely we're still probably looking out for a yen more dollar weakness. For the yen, not the yen, nothing to write home about. There's nothing in the yen. Stay out of the yen. There's nothing happening in the yen. You can see the indecision going up, the choppiness in the yen market, all of them, GBP, JPY, U, JPY, and so on and so forth. So guys, that is it. Is that it? So guys, I just wanted to answer a quick call. Let's continue. So yeah, so there's really nothing. GBP USD is the only one looking clean. Euro USD ain't looking clean. None of them is actually so very. None of them is very, how I say it, there is no high probability stops. I mean, what I'm seeing is a low probability setup. Low probability setups. The probability of it happening is very low in my strategy. So right now, there's nothing I can say for this coming week. Let's just see how the week will start. But I'll keep you guys updated. I got a new phone, so I'll be able to just make some, at least a little bit good what is it called, good video, just shots mostly. So I suggest to keep you guys updated, because my problem was I didn't have a good phone to record some shots, so I couldn't always make up shots. But now I think by the strength of God, I'll be able to make shots for you guys, and just to keep you guys updated on what I'm doing, because right now I'm not seeing anything. But when the week starts, you could see something. So thank you much, guys, for staying up to this point. Like, subscribe, most especially like, comment, and I believe all of us will be on the top in the future. So get thank you very much, guys, and peace out. See you next week.